This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best technology stock to buy right now. Today is Tuesday, January 6, 2015, and here on the opening slide we see that this company is in the diversified machinery space, and we see its 6-month upside potential at 18.5%. Now, while we only see its 6-month upside at 18.5%, we think that this company is poised to do extremely well for the second half of 2015. So we're looking at the 6-month time horizon as well, but we won't be surprised if this stock comes up again. On the second slide, we see that the name of this company is called Zebra Technologies. The ticker symbol is ZBRA. Once again, the industry is Diversified Machinery. And once again, our 6-month upside potential for the stock is 18.5%. And, you can put an asterisk behind that, but we think it will go up substantially more in the latter half of the year. On to the quick facts slide. Here's a business summary description for Zebra Technologies. Zebra Technologies Corporation manufactures and sells printers and related products worldwide. Its products include direct thermal and thermal transfer label printers, radio frequency identification, that's RFID, printer coders, dye sublimation card printers, real-time location solutions, and related accessories and support software. The company offers its printers to print barcode labels, receipts, plastic identification cards, wristbands, and tags, as well as to encode passive RFID smart labels and cards. Its printing solution applications comprise inventory control, small package delivery, baggage handling, automated warehousing, just-in-time manufacturing, employee time and attendance records, file management systems, patient barcode, wristbanding, medical specimen labeling, shop floor control, in-store product labeling, employee ID cards, driver's licenses, and access control systems. So, yeah, that is a mouthful, but essentially Zebra Technologies appears to be the dominant barcode company. We did not have time to research its competitors, but they seem to be the big and main player in this space. And if you listen to the description of this business summary, you see that there's a ton of applications for the technology. You can think about all the increases in efficiency companies can control, when they know where their packages are, know where their inventory is, know where the products that they're selling is going, and where they're located. And additionally, everyone's not familiar with, say, this term called RFID, which is radio frequency identification, but it's a pretty cool technology that's been around for a while, but it's starting to just gain more and more implementation and traction. And essentially RFID is a technology where you can basically put a very tiny chip on the side of a box or something, and imagine it's in a warehouse, and just using a radio transmitter, radio frequencies, you can identify where that box is. And because it's a unique chip, because this chip has a unique identifier, you can then track later where it is outside of your warehouse and where it is, say, in the retail store. So this company is pretty interesting, and as we'll get into it, they recently acquired a subsidiary of Motorola that is really increasing its upside potential. So at any rate, the name of the company is Zebra Technologies Corporation. Their website is www.zebra.com. Zebra Technologies is headquartered in Lincolnshire, Illinois. They were founded in 1969. The number of employees they have stand at 2,583. Once again, the ticker symbol is ZBRA. The sector they operate within is industrial goods. The industry they operate within is known as Diversified Machinery. Over the last 12 months, their revenue was $1.2 billion. Their net income over the last 12 months was $126 million, and their cash from operations was $187 million. Zebra Technologies' market capitalization stands now at $3.9 billion, and you classify that as a mid-cap stock. Onto the products and services slide. Basically, we have excerpts from a recent investor presentation given in November of 2014. Basically, all the latest news right now about Zebra is its recent acquisition of Motorola's what's called the Enterprise Business Subsidiary. And Motorola's Enterprise Business Subsidiary is very, very complementary to Zebra Technologies business. Basically, the Enterprise, we have some descriptions here, but the Motorola Enterprise business, which they acquired in the last quarter of 2014, was an established, let's say it says an established leader in mobile enterprise computing, data capture, RFID, and wireless LAN. They have strong services component and scale and procurement, manufacturing and logistics. And similarly, as I mentioned, Zebra already was in the RFID space and was already in the barcode space. So this is a great complement of a great merger complement, I guess I could say. Additionally, here on the products and services slide, we see a description of some of the main industries that Zebra Technologies services. Basically, it's retail, travel and leisure, manufacturing, as well as healthcare. We have another excerpt that says Zebra Technologies serves 95% of the Fortune 500 companies. And we also have two pie charts that shows in 2013, 44% of their revenues came from North America, 34% of their revenues came from Europe and the Middle East, 15% came from Asia Pacific, and 7% came from Latin America. So that's by region. The 2000 sales by industry, 35% of the sales were to the retail sector, 22% were to travel and leisure, 21% was to manufacturing, and 22% is listed as other. But from those two descriptions of those two pie charts alone, it's clear that Zebra Technologies has a worldwide market share and a number of different and diverse businesses. Other things here on the slide is just excerpts of management pointing out that there are mega trends that kind of support Zebra Technologies business right now. There's the popular term, the Internet of things and connected devices and sensors, which conceivably that trend supports the use of Zebra technologies, the use of cloud technology. You can see how that can support the use of Zebra Technology solutions. Additionally, they have here that the business climate is ripe for opportunity. Basically, there's a growing middle class in a lot of emerging markets that Zebra Technologies would benefit from, and the continued focus on increased efficiency, higher asset utilization, increased productivity, all different things that Zebra Technologies, you can see how they could increase profit margins, lower costs, and just increase efficiencies. All right, on to the metric slide. Once again, the annual revenue over the last 12 months was $1.2 billion. The net income was $126 million, and the cash from operations was $187 million. The operating margins for Zebra Technologies in 2013, the operating margins were at 18.5%, and in 2014, they're tracking to be 16.5%. So that's a slight decrease as expected, as well as a further decrease in 2015. We think that it's just a result of newer product mix as a result of their merger, but the offset will hopefully be increased sales. On to the valuation metrics. The trailing PE ratio for Zebra Technologies right now is at 31.0, and the forward PE ratio is at 15.3. So that is a major percent change from trailing PE ratio to forward PE ratio, and that implies that analysts expect their earnings to increase substantially over the next 12 months, compared to the past 12 months. The PEG ratio for Zebra Technologies is at 1.7. The price to sales ratio is at 3.4, and these aren't super cheap, but not too expensive either. Similarly, the price to book ratio is at 3.7. The enterprise value to EBITDA ratio is at 13.0. The recent closing price for Zebra Technologies was $76.49. The 52-week low for the stock was $52.61. The 52-week high for the stock was $87.53. So the stock is trading closer to its high than its low. The 20-day moving average is at $76.43. Sorry, $76.83. The 50-day moving average is at $74.25, and the 200-day moving average is at $74.24. The daily average trading volume for Zebra stands at 524,000 shares per day. So this is not a heavily traded stock, but it has decent liquidity. And the beta for the stock is at 1.7. So the stock is a little bit more volatile than the market. I mean, when the market goes up, this tends to go up more. When the market goes down, it tends to go down more. The dividend yield for the stock is at 0%, and consequently, the average dividend payout ratio is also at 0%. On to the price chart. Basically, over the past 12 months, Zebra Technologies has increased 41.5%. So the stock has already experienced a nice run-up. Overall, it's kind of been continue to advance with advances and pullbacks along the way. But as mentioned, the stock right now is closer to its high than its low, standing around now at around the $76 level. Now, so Zebra, and let's go on to the final summary page. So on the final summary page, we have Zebra's financial statement quality at excellent. The stock before the merger, the end of the third quarter, they actually had zero debt. And as a result of the Motorola Enterprise business acquisition, they now have about $3.25 billion worth of debt, but we still feel that their financial strength is excellent. Similarly, the operating margin trend has declined a bit and is expected to decline a bit more, but we're not overly concerned about that. The price pattern trend, it's been increasing. As mentioned, the stock has already increased about 40% for the year, and that was before the Motorola Enterprise business acquisition. And let's see, our overall market outlook right now is still neutral. We're not seeing any overly bullish or overly bearish opportunities one way or the other, so we don't expect Zebra Technologies to face any headwinds or have any supporting winds for their stock price movement. As mentioned, the recent closing price for the stock is at $76.49. Additionally, we see its 6-month price target at $90.64, and that's our 6-month price target. But as mentioned, we expect that the acquisition of the Motorola business is going to bring substantial additional earnings in the second half of 2015. So we see its 6-month potential at 18.5%, and we would only put an asterisk on it because we expect its upside potential to be substantially greater than that in the second half of 2015. So for all these reasons, this is why we believe that Zebra Technologies is the best technology stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hi, this is Matt Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental and technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Connor Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Connor Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that the technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.